Well, the Australian market is tracking sideways and it appears unwilling to break in either direction. Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 2nd of July 2024, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. Alright, so I wanted to start with a potential negative note, and that is basically that we might see another Reserve Bank of Australia rate rise when they meet next at the August meeting. That comes after the monthly CPI data continues to come in hot. Australian inflation's actually risen across the past 6 months, and we will see a bit of an update on inflation with the quarterly inflation read at the end of July. But given that we've seen, pretty much all the months up until now, it looks like that's going to be, continued above the RBA's target range. Inflation's still, way higher than it's wanted to be, and perhaps, interest rates having to go higher to deal with that high inflation. That's really not what Australian shares want to see. Australian shares have really enjoyed a pretty good sort of year at this point, based on the view that interest rates are going to be cut, that inflation's coming under control, that we're going to have a soft economic landing, that maybe not this year, but in 2025 we're going to see earnings growth resume, and that everything's going to go well. That's not really been the case. That's not what economic data has told us. That's not, the picture for the Australian economy. And so, our market has continued on in this somewhat delusion and largely being driven by the US as well. But we risk a sort of scenario where the domestic economic conditions come home to roost. And that is, perhaps what we'll see over the next month and a half. We've got, Australian second quarter CPI. If that does come in as the last few months have, and it comes in stronger than expected, the RBA may be forced to raise rates again in August. And indeed, today we saw the RBA meeting minutes from their last meeting, and they did point to, the fact they may have to raise rates again. And so, I think they are sort of slowly gearing up and sort of acclimatizing the public towards another potential rate rise. It's the opposite in the US though. The US has seen inflation come down. Last Friday they had the PCE, the personal consumption expenditure data, the Fed's chosen measure of inflation. That continued to fall. It came in as expected. Other measures of inflation have come back below 3% for the US as well. And really it's headed towards the Fed's target rate. And it's in that environment that the US Federal Reserve is going to consider cutting interest rates, so the opposite to us. That's helped US shares hold their highs, perhaps even propelled them a little bit higher. And the US Fed is expected to cut rates in September now. So overall, we've got this sort of dichotomy, this difference, rate cuts in the US, rate rises in Australia. And given that's the case, it's no surprise, at least to me, that our market's underperforming. We've seen the US continue on their uptrend, make fresh highs, while our market has really struggled. We haven't really gone back to the 7,900. The last few peaks have been notably lower than the previous, and it's likely due to that difference. Inflation's still a problem here in Australia, inflation getting under control in the US. Rate rise is still a reality here in Australia, rate cuts becoming likely in the US. And that's the majority of the difference between the Australian and the US market. There are other differences, however, and I'll touch on them quickly now. In the US, we're still seeing company earnings growth, or at least we're expecting to see company earnings growth, whereas in Australia, earnings are expected to be lower this year. We're also expected to see a soft economic landing in the US, with inflation coming under control, while a recession is expected to be avoided, at least for now. In Australia, we have no clue. Our economy is already headed towards recession, yet inflation's not under control. So whether or not we have a soft economic landing is impossible to say, because we're still a long way out from the airport. And then, finally, we do have another scenario in the US where there is extreme amounts of money printing or huge government deficits, and here in Australia we're running a very slim government surplus. So the government's actually taking small amounts of money out of the economy. So those differences are, probably the major reason why we've seen the disconnection, US markets continuing higher, and our own market sort of struggling. But the reality is both markets are still extremely expensive. The US market is priced to perfection, our market's also overpriced. And so even if the US is to continue a little bit higher, it's likely that subsequent gains are going to be very incremental from here. Indeed, historically, when the rate cuts do come, that's actually when you tend to see markets turn around. Finally, a big talking point, at least for the past week, has been the US election. It's still quite a few months away. It's going to occur in November for the presidential election. But we're obviously going to hear more and more about it as time goes on. We're going to see more news articles. It's going to have more of an impact on the market. The unfortunate reality is that, both candidates are not really the best and brightest that the US has to offer. And unfortunately, as that sort of comes home and becomes acknowledged by people and starts to filter into the market, I think it's going to potentially lead to further volatility for the market. So you do want to keep an eye out there. You do want to keep an eye out around debates, around campaign announcements, policy announcements, polling, and just consider how it may affect the market. But I think that this time around in particular, I suspect we're going to see some more volatility in the lead up to the US election. Alright guys, so let's have a look at the charts for this week. We'll start with the XJO, and like I said at the start, we've really been unable to break ourselves far away from the levels of the past few months. We've really just been drifting along between roughly 7,700 and roughly 7,800, and as I said also, we're seeing slightly lower peaks, and we're actually seeing slightly higher troughs. So that leaves our market in a pennant pattern. We're heading to the point of a flag, essentially. We would expect a breakout at some point, but if you have a look at the pennant here, you can see that we've really, got plenty of time still that we can track sideways. And to be honest, until, something dramatic changes, I think we will track sideways. I think our market is wanting to and perhaps willing to sell off and fall from here. But for that to happen, we'd likely need to see a bit of selling in the US market. It's very unlikely our market will sell off if the US makes fresh all-time highs. So I think we're just waiting for that cue, waiting for that signal for our market to sort of come down a bit, like I said, given that we've got rate rises on the horizon. And that cue is probably going to come from the US market. So let's have a look at the S&P 500, the top US market by how broad-based it is. And we can see they've stalled out at the all-time high roughly at 5,500 index points. They certainly don't look bearish from here. They don't look like selling off. They're maintaining their strong uptrend, higher peaks, higher troughs, and they just set a higher peak. That being said, they haven't been that willing to go too much further, and as I said earlier as well, each further gain has been increasingly smaller. The gains have been increasingly incremental. Overall, they look a bit more sideways, at least in the short term. If they do pull back, we're looking at the previous all-time highs as potential support levels. Alright guys, so I will end it there for this week. Like I said, everything looking a bit more sideways, everything sort of a bit uncertain. There's some positives, there's some negatives. For Australia, mostly negative. For the US, mostly positive. And in that environment, we seem unwilling to go either way. Hopefully you guys enjoyed this one. If you did, let us know. Click like, click subscribe, and we'll see you next time.